Good evening, everyone, and thanks for joining us for our Better Investing Online Chapter Education Committee Open Forum. Tonight, we're going to talk about a few exciting things that are coming up, and then we're going to talk about some fun changes that have been made to the SSG. As always, we might talk about specific stocks. If we do, we're not telling you to go out and buy them. We just want you to know that this is, we're just using them as examples, and we encourage you to go out and do your own analysis because that's the fun of BI. Also, this meeting is being recorded. So if you are, running from the law, or if you are in witness protection, or if you just don't like to see your face on recording, you can go ahead and take yourself off video. And after we're done with our little presentation, there'll be an opportunity for everyone to ask questions, not just about the presentation, but about any BI or stock or any kind of related topic that appeals to you or that you'd like to ask us about. So at this time, I'm going to hand the reins over to, actually, I should first introduce the Education Committee. Dan is sort of our honorary member. He's our member emeritus who's trying to get out of the group. We won't let him go. And then there's myself, Bill Suter, and Sriram Matabushi, who's going to join us soon. Dan, I'm going to turn this over to you so you can tell us about the fun things that are coming up.
I think that I'm going to be able to share my screen in just a second. Can you see my screen now?
Not yet.
Yeah.
But yet you should have the privilege to be able to share. I'll make sure that. There you go. Great.
But, you can now see my screen, and now you see it full screen. One of the things, I'm certainly happy if people have questions, that they ask it as we go along here. I want to do a couple of things before we turn to what we're going to get into in the new developments in the SSG and the software. But the first thing I want to mention is that on August 5th, we are going to have our annual meeting, and in conjunction with our annual meeting, we're going to have Craig Bremer, who's a national level speaker, and I just want to say a little bit about that. From 8 to 8:30, we will do a little bit of chapter business, and then we will go into having a speaker. The meeting will be hosted by Howard Johnson, who's the BIVAC chapter support chair and event host. And this is a picture of Craig Bremer, and he's going to talk about the question of whether it's better to trim or to sell stocks and when you should do that. Many of you may have heard Craig speak. He has a long background as a professional finance person, and now he's very active in BI. He follows the BI principles. He often talks about stocks which are a little more blue chip kinds of stocks, stocks which would have high star, morning star ratings and things like that. But he does try to get both growth and some income stream. So I find him a very good speaker, and am delighted that he is going to be the speaker for the annual meeting. To participate in this, you have to register, and you can do that by going to the online Better Investing website, and then one of the tabs on the left-hand side is the annual meeting and special events, and you will get to one, which is the annual meeting event in August, or you can go just to this URL, which I realize is pretty long, but this will be recorded so you can get it. And I will put it in the chat box later on. So that if anyone wants to go there, they can. Any questions about this before I move on? Okay. Well, I want to do a drum roll for the chapter portfolio contest. We had a preliminary pilot one, and we are now in the second year of having one. I want to tell you a bit about how it functions and invite you, if you're interested, either as an individual or as a club, to join the portfolio contest. And I guess one of the questions is, why would one want to be in a portfolio contest? Well, I think it's fun. We like to see how a portfolio performs. We like to think maybe we can do a pretty good one. We like to see how we compare with other people who have done them. And I think another thing for me is, in stepping back and looking at the total set of entrants, I like to see how BI principles work. And I'll comment on that in just a second. So we're going to talk first about the 23-24 portfolio contest, which is now in operation, but the 24-25 one will be basically the same set of rules. What people did was they invested $100,000 of just imaginary money. There's no real money in this. And the guidelines dictated that they have between 4 and 7 stocks. The contest starts at the 1st of September and ends July 31st. And there's one opportunity in February, about in the middle of the contest, for people to make any portfolio changes that they would like. So the portfolio contest will be essentially the same. One issue that we ran into this year, which we'll have a ruling on, is that a company got bought out, and we didn't have a rule about that, but what we agreed, and I think what we'll agree in the future, is that that money can be reinvested after the buyout occurs, even though it isn't a one time that there's an opportunity. So in the 23-24 portfolio contest, I just want to share a little bit of results. The best entrant, the entrance that has the greatest increase, was the last time I looked at the valuation of the portfolios, which was for a July report. The Let It Ride investors of Carson Valley had converted their $100,000 into 150, almost 155,000. They had a 54.7% gain. They did it by largely, and certainly heavily influenced by one rocket stock. Has anybody got a guess as to what stock they owned, which did extremely well? And I will give you a hint. Its first letter is N.
NVIDIA.
You were right. And the Almond Investment Group also had NVIDIA, but they bought it in the middle of the year, and they are also, I would love to have either of these portfolios. I'm extremely envious of these two portfolios. A little more important thing is that I compare the average portfolio with the S&P 500, and in the other years when we've done this, the average portfolio has surpassed the S&P 500. There does seem to be a little bit of a pattern, and that is when the S&P drops in value, I think the portfolio stocks generally have a little higher than one beta, and they seem to drop a little bit more. But when the market comes back, they seem to come back a little bit more strongly. This year, it's kind of been a nip and tuck kind of situation. The S&P went down in the fall, and the portfolios lost a little ground. They gained it back and got ahead of the S&P, and now they're almost even. I don't have the comparison right tonight, but they were very even the last time I looked. So for the 24-25 portfolio, you would have to do the same things that they did for the earlier one, $1,000 divided between 4 and 7 stocks. It goes from the 1st of September till the end of July. The one thing I need to say to you is that you must put in your portfolio before the 1st of September. So you have to put it in by the 31st of August. And in order to do that, you need to put in a application, a registration, shall we say, and you can do it either online, and I will put that in the chat, or you can do it by emailing contact@onlinebetterinvesting.net, just the general contact for the online chapter. So that is the information about the portfolio contest, and I'll take any questions that people might have about that at this point. Okay, well, I want to talk a little bit about some of the new developments with,
Hi.
Yes, question?
Hi. Yes, I do have a question. It just took me a minute to get back over to the screen. With the portfolio contest, how do they rate when you start investing in that stock? Is September the first the first day that portfolio starts?
Yes, that's correct. And how we do it is I'll look at how much you want to invest. And let's just make it, for simple discussion, that you want to invest $100 in XYZ stock. And XYZ stock, to make it easy, is $10. So I would divide the amount you want to invest by the value of the share, and then I would get the number of shares that you would have. In this example, if you invested $100 and it was $10 a share, you'd get 10 shares. Now, in reality, people usually they don't invest $100 in a stock. They usually, if you invested in 5 stocks, you'd put maybe on average 20,000 in them. If you had 7 stocks, it would come out to be between 16 and 17,000 if you sort of have an equal amount. You don't have to have an equal amount. You could put 30,000 in one stock and 10,000 in another. That would be perfectly okay. But when I do that division of the amount of money divided by the price of the stocks, I carry it out to multiple decimal points, the number of decimal points that Excel gives me. So you get an odd number of shares usually. But that's how that's done. Good question.
Okay. And does your portfolio have to be diversified?
Well, it has to
Does
have
it,
4 to 7 stocks. So it
Right.
has to have that number of stocks. But, you know, if you put them all in tech companies, we would not criticize you, or, you know, the rule is just that you have to have 4 to 7 stocks.
okay, so it's 4 to 7, a minimum of 4 and a maximum of 7.
Correct.
And when you get an opportunity in February to change out something, so it would be as though you're selling
Yes,
okay, and you would be repurchasing, and then it will go from there, keeping the same percentage of the 100,000.
yes. So like,
Okay,
for example, if you had made $3,000 on a $10,000 investment, you would have $13,000 in that equity at the February time period, and you would get that amount of money, the $13,000, to reinvest.
okay, thank you. Okay.
Dan, I just thought of a question. I'm assuming that the day that the portfolio contest starts is the day that that's the price that you're purchasing the stocks at. So if you say, I'm going to put this much in here, you can't wait a couple days if it goes down or whatever, that's the day when everything gets purchased, correct?
Yes, if you tell me today, today's price won't have anything to do with it. It will actually be, I always do it on the close of August 31st, or the last trading day of August. I take those values. And
Thank you.
you open up on September 1st with the closing value of the last day of August, the trading day of August.
Dan,
Okay.
where can we get the online contest form?
I will put the URL in the chat after I stop talking.
Thank you.
And this year, September 1st falls on a Sunday.
Yeah.
So I guess we would be placing our trades on Monday. So we'll be preparing, you know, whatever it is, we'll put it in on a Monday. And again, this is virtual, so nothing is actually,
That's
you know,
correct.
there's no,
Yeah.
okay,
No,
got
but
it.
you have to tell me before the end of August which stocks you want. And
Right, with your application.
yes, and then I will take those stocks and the amount of money that you want in each, and I will figure out the number of shares you get based on the close of the last trading day in August.
The close of the last trading day in August?
Yeah.
Oh, okay.
Yeah.
Okay,
yeah.
because, all right.
The closing price of the day before the contest opens up.
Okay. All right. Thank you. No more questions for now.
Okay. Well, I'm delighted that there were questions. Okay. So this was a presentation that Susie Arzenberger made in May 2024, and you can get it on the Better Investing National website. And the first thing, one of the things about this is, and I should talk about this for a second first, is that the SSG has been there for a long time. And what they're talking about is enhancements to it. So what you're going to see, particularly in a couple of slides that I'm going to do, are things that have been around for quite a while and just have had certain kinds of tweaks and changes in the recent past. Most of these are ones that have happened in the last 6 months, but 1 or 2 of them happened in 2023. Some of you will recognize that now BI has what's called a member sentiment information in the SSG. It has always had data that you could get for the more recent past 90 days of completed SSGs. So you could go in, I'm showing you data from these SSGs, and you can go in and you can copy these, you can download them, and then you can manipulate the data in any way you want. So you've always been able to calculate an average of BI members, judgments, and so on, if you wanted to. But more recently, they have created kind of a drop-down thing where you can get their calculations of it. And so they have added, I believe, one column, which is the total return, although maybe that was there before, but they talked about that. So there's always been this information, how members feel about any given stock. And now you can see that there's this tab called sentiment, and you can see all these things across the top: sales, EPS, IEP, or high PE, and so on. And for the one that's they're highlighting here, in this case, sales, you get one of these charts, and you get the median. This is that's the middle score. 50% of people gave a higher number than 8.2, and 50% gave, median is 8, 50% gave lower, and the mean, which is the average rather than a rank, is 8.2. So, and then there's these other things which are statistical aspects to it. And what they give you is the range of scores that people gave, and what's called the standard deviation. That's sort of the average spread. One of the things that they do here is they do what's called removing the outliers. So when they give you this data, they say if there's people who they think kind of gave crazy numbers, they've taken those crazy numbers away. So that's, and they tell you how many studies there are. So that is the sentiment. And I like looking at this. I like to think that, you know, I like to see, are my judgments anywhere near what the average BI members in? And if you believe that we're pretty good, generally, statistically, when you pool information, often group judgments are better than individual judgments. So I do give some credence to these average judgments. And then you have to figure out, are people generally kind of optimistic, or are they generally a little pessimistic? And the group judgment might reflect either an optimism or a pessimism bias. But I think that often group judgment is a little bit better than individual judgment. That's one of the things that statisticians seem to find. Now, another thing that I want to talk about is that they have the heat map. I love the heat map here when you come in and you go to the SSG Plus and look for stock ideas. But they have these predefined screens. These are screens where they look for certain kinds of companies. And they have, I guess, a half a dozen of these screens. They have a small company screen. Many clubs, I belong to a club where we really are a little bit overrated in large cap stocks, and we decided that we should get some more small cap stocks. And we really had a little bit of trouble deciding where we might find small cap stocks. There are some paid newsletters, even ones that are associated with BI. And there are screens that you can develop to look for small cap stocks, but they're a little harder to find, and they're a little bit harder to find information about. And so our club thought that looking at the small cap screen would be something that they would like to do. There are stocks which are more value stocks. There are quality stocks. There are stocks which are quality and dividend yields. So those are stocks where the screen is to look for stocks that will have capital appreciation, but will have a dividend yield that's reasonable as well. So that, if you're retired and you want dividend income for monthly expenses and so on, you might want to invest more in quality with dividend yield. The other thing which they've added more recently is what they call the A list of stocks. And this is sort of a group of stocks that they think have very good properties at this particular point in time. And what I want to say about that is they have a number of factors that they get off of the SSG. And with those factors, they have an audit screen, which I don't have shown here, I don't think. But when you go into the SSG, there's a place where you can get an audit screen. And there are a set of things looking at the history and the future projections where they had certain expectations. So one of the expectations would be that a stock typically should not have a debt level more than 33% of its value of a company's value. And so that would be another thing. They would have a standard for EPS growth and revenue growth. They have a standard for upside downside ratio. And what they look for with this A list of stocks is, does it meet virtually all of those criteria? There's about a dozen of them, I think. And it has to meet all but zero, or it can only miss on none or one. If it gets more than one that it misses on, then it's not on the A list. So this is a set of stocks that meet an awful lot of BI criteria. Now, when you are actually doing an SSG, you might not feel that a company you were looking at needed to meet those quality requirements. For example, I have invested in rental companies, and the bigger the rental company's debt, as long as they can manage it, is the more money they have invested that can earn money for them. And if they can make more money with that investment than they're paying to service their debt, that adds to the amount that the company earns. So I might look at a rental company and say, oh yeah, it has a 50% amount of debt, but I'm going to tolerate that. because I think that, you know, it's probably a smart way for them to make money. So I just want to say that these guidelines, you have to take into consideration factors. It's like anything else that BI suggests to you. You should make your own judgments, and you should, you have to individualize your analysis. Although these are kinds of things that generally you would want. Another kind of thing is, for different size companies, people expect different rates of return and growth. So that's another thing, although they may adjust that for size. But the important point is that they have these things and they would flag them if they weren't met. And if they flagged 2 or more of them, they wouldn't be on the A list. So one of the things that they have done is that recently they've added some audit factors for banks. And they're now, if you look at a bank, they will look at those audit factors as well as the other ones when they do it. So that was the new thing. And the other thing is, I don't remember the audit tab always being there, and it has been there now for a while. So these were the things that I wanted to discuss. And so I'm happy to take a question or two or a comment or two, and then turn things back over to Chris. Questions or things you want to bring?
If anyone has questions, or also if there's something new that you've discovered in SSG that is one of your favorite things, we could share that with everyone. We have some more slides about SSG additions, but in the meantime, while we bring those up, I'd love to hear what your favorite new good stuff is. So I put in the chat, hopefully you saw the link to the full presentation that Susie Arsberger did at Bank. You can check that out. It's great. There are a lot of great new features. This is some of the stuff that Dan was talking about, I think, right, Dan? This is sort of, yeah, this is the same information.
Oh, no, this is not actually. They now date when the price and the judgments were made.
Which is great because you don't want to use old, outdated information.
Yes.
So here's some reports and studies that we can use. Yeah, you can now export your studies as a CSV if you want to keep track of them. And then, of course, you can have all the Excel capabilities. Oh, and here's Shriram now. He might want to speak to some of these. And yes, you can open them. You can use them in Excel, also numbers and Google Sheets. I'll give Shriram a minute to get himself situated, and then I'll let him take over talking about the new features. Shriram, do you want to take over and start sharing these?
Absolutely. Do you want me to share my screen or continue with where you are?
No, that's fine. If you can go ahead and share your screen, that way you won't have to just tell me to.
Give me 1 second. Let me open my presentation and we'll get started on this. I'm sorry, unfortunately I double booked at the same time today and I didn't realize it till this evening.
I feel like I'm going from meeting to meeting to meeting also lately.
Yeah, let me see. Almost there.
But if you can use your reactions button or just raise your hand if you were able to go to bank and if you saw Susie's presentation in person. Did anyone see presentation? Hey, great. What did you think, Peter?
For me, it was all new. So and it's my first real training on SSG. So it was really informative.
Yeah, bank is a great place for beginners. I feel that you can just, it's like a fast track, right? You can really get not just learning SSG, but I don't know. Do you feel, was that your first bank and your first introduction?
My first bank, I've been involved with Better Investing for coming up on 3 years, but it's the first time I had a chance to go to the bank and went to 13 different classes, and I just thought that just learned something from every single one of them.
It's a little bit like drinking from a fire hose, but
Yeah, looking forward to the next one. Right? So
yeah, absolutely. Sriram, you ready to?
I am almost, I did download it. Let me get to it. Opening it.
Yeah, I went to a bank a couple months after I joined an investment club, and I just felt like I took the all day SSG workshop, and then just like speaking to people at the table. I mean, that was my favorite part, is just talking to people in the hallways and sitting down with people who had been investing for decades and just knew so much. It was a really great experience.
Yeah, it's amazing, isn't it?
And the other great thing, of course, like Sriram and I, who usually only see each other on Zoom, we got to see each other in person in the same room. And that was true with my investment club too. We used to only meet virtually, and I had never met some of the people in person until we went to bank. So
yeah, can you all see my
yes,
presentation?
we can. Yeah, it's not
Okay.
in slideshow mode. It's just the
Yeah.
regular mode. So.
There you go. Now in the
Great.
slideshow mode. Did you start any present discussion at all? Or
Yes, we did. So just keep going. I don't know if you noticed the slide that we were on when you joined.
yes,
Keep going. But we can just go to that CSV.
I think this is the one you were on.
Yep. So if you want to just take it from there.
Certainly. Of course, the best way to actually see all this is when you go to the website and walk through the SSG. That would be the best way to see. But again, this is a pretty neat way of getting the results from the screening results into a CSV or a Excel file. I think this is something. I mean, they did a lot of enhancements. I think the whole process they want to do is make sure that it's so good that everybody will be using only the online tools, right? I think that's where it's going. So it's completely enhanced. I mean, it's a pretty straightforward process to how to export this. I thought these are a couple of things that are of important. They included this audit that you can check at the end of your study. Especially for banks, I think they have added. I mean, one of the clubs I belong to, we have many of you probably know him. Joe Farrell is his name. He is a very he worked in the banking industry for a long time, almost 40 years or something like that. And he always used to caution us, when you buy a bank, you have to look a little beyond what we typically get out of an SSA. So some of these things, the bank assets are differently evaluated. So I think they added those features to the SSG. Yeah, again, the return of equity, we had to go to, I don't know, what's that, not manifest, what's the other, we go through library to get to it, those reports.
Morningstar or Value?
Morningstar reports. We used to go to get actually the return on equity from those, but they included now into this, and again, we can make judgment on that. They've added this 80% comparison in the forecast. Again, we always do that if he goes to the low price, which is already there we use that. This is something they removed, which I think probably probably to me this is a useful thing. If it's greater than 10, again, it's obvious that for that. In the stock screening, they've added some of this updates on, but because they added so many screening alternatives, most of the time you find only a handful of companies, and probably those are foreign companies, you cannot invest them in anywhere. So some of the things I think that came out of the changes in the to me, I don't know any of you noticed or not, we can actually used to have only 5 years of PEs and earnings, EPSs, but now we can compare all the 10 years. So we can actually use this option to, other day, I saw a presenter, out of 10, she checked out, I think 7 of them, I think EPS, and 6 or 7 of the PE ratios. I mean, again, it's up to her, but to me, she's ignoring the whole history of a particular stock. If you're just only biasing everything to 3 years out of 10 years, I don't know if it's for, she said that's what I like, so what can I say? But now we have this option of 5 years to 10 years. I don't know any of, if you had a chance to look at and try that out. This REIT companies, again, there are a handful of changes that are, again, I'm not very comfortable in investing this. I don't know, any of you actually use REIT and invest in? Maybe Chris does. No, she actually invests in real estate, right? Got it, Chris? Yeah. So again,
Sure, I'll make a couple of comments here.
please.
Usually these are real estate companies. Although there are some REITs that are doing very well right now, which are more in the telecommunications area. Somehow or other, the companies that send waves all around and are the towers that push them to the next tower, fall into these REIT categories. The thing, though, that I would say is that for clubs, REITs create tax problems. Your treasurer would probably not be very happy with you if your club bought a REIT. At least the treasurer that is in my club looks at them like the kiss of death, from his perspective of having to prepare annual reports. But one of the things about these things is that they typically generate a high amount of money. They cannot retain money the way regular companies can. So they have to distribute their profits every year. And that often leads to a pretty rich income flow from these if you take the income rather than reinvest.
Yeah, no, I think that's a very good point.
So I think kind of what Dan's referring to is that income in the form of a dividend is kind of classified as what's called a return of capital. And at the end of the year, you get it, the appropriate tax form to give your accountant or whatever, just to make sure you do your taxes right. But yeah, the benefit is the higher dividend yield generally, but it's just something to keep aware of.
And I think the problems are for clubs for some reason rather than for individual investors in terms of taxation.
Yeah.
Because certainly I know people who have them in their income tax process goes along just fine.
Yeah, but let me ask you this. If you have a dividend, I don't know, each company gives maybe 3% dividend every year, right? 2
The
to
average
3%.
dividend is maybe a little less than that,
Yeah.
but
So-
between 2 and 3%.
Right, but if a company, it doubles in price, in 5 years, compared to 5 years of 3%, dividend, I don't know. Most companies, which especially those companies that give a higher dividend, most of the time their stock price is very stable. So I
I would
know.
say generally it's more stable. It's less of a growth company and more of a maybe something more along the lines of a utility.
Yeah. Again, my point is, if the value is not increasing, you're getting 3%. I'm just giving you an example. 5 years, if a company doubles, if the price goes from $100 to $200, whereas you're getting only price maybe increasing or going from $100 to $120 over the 5-year period for that particular stock price, right? But they're still giving you only 3%. So in 5 years, roughly, I don't know, I'm just using simple interest, right? 15%. So it's gone up from 120 plus another 15, $135. Whereas stock B, if you bought it, even though they're, for example, I don't know, Google or Microsoft, one of them, they don't, Apple or Microsoft, one of them, they don't give dividend. So, but its price in 5 years is doubled, right? So dividend works very well if you have a couple of $1 million, you want to put it in a stock and just leave it there without touching it. But I don't know, I think I would always buy an Apple which doubled in last 5 years rather than a company that's giving me only 35%.
Well, I think the thing that I would say from a BI perspective, BI's mantra is quality growth. So what they're looking for is companies with good financial situation, but are growing. And so clearly they're looking for capital appreciation. And if you watch somebody who's a BI investment manager, you'll see that they do have dividends, but their dividend will be their average dividend rate will be between 1% and 2%, at least at the ones I followed a couple of these guys who purport to invest a BI way, and they're not trying to get you 4 or 5%, which somebody who might have a a retirement portfolio and want to live off of it might want to have, despite the fact that they're not getting much capital appreciation.
Yep, yep. No, for example, there was a company called NNN that was advertising, and I think one of them actually had a plenary speaker or something like that. And they said their dividend continuously increasing every year for the last 30 years or something like that, which is crazy. But their price is very stable. If you look at last few years, it's almost at the same level, you know. So yeah, I think in the overall picture, yeah, let me go through this. Yeah, again, these are FFOs, and again, these things, I'm not, Dan, if you want to talk more about these things, FFOs and NIITs, that's all fine. But to me, again, this is something they added. This is the latest. They said they added this.
Yeah. Funds from operations, what they're
Yeah.
talking about, which is sort of.
Yeah, more of the REIT again. Yeah, again, I'm not very conversant with this, and I don't understand much of this, so please pardon me. If anybody has any more information, please jump in. I think this is specific to these REIT companies or REIT.
I think one of the reasons that this caught my eye is because I had never really thought that Better Investing did much with REITs. And so I was surprised that there was so much about REITs in what they have updated. And I'm stepping back, and Phil may have other comments on this, but I sort of think what they're doing here is what you get with a standard company is earnings per share and revenue. And they're trying to get indices that either are those or are comparable to those for both banks and for REITs, because you have to appraise them slightly differently. And with banks, they've always had, you can find a lot of discussion of how to analyze a bank in the Better Investing archives. But with REITs, I was actually surprised that they had anything on REITs in the SSG.
Yeah, it's just one of those things to keep in mind. It's not your standard SSG company review, banks and REITs. So it's more of a, I would say, probably an intermediate topic, because you have to substitute out a couple things with REITs. Instead of earnings per share, you have to use what's called a funds from operations. So there's just a couple substitutions with these two kind of reviews.
Yep. Yeah, no, I think point well taken, and that's why I try to keep away from this, you know. Yeah, I think we are almost few more minutes left.
Well, maybe we should ask if there are some questions or
Yes.
things that people would, any kind of thing that is on people's mind that has to do with Better Investing.
Do any of you have REITs in your portfolio?
I'll ask the audience or either of you, Chris, Sharon, and Phil. One of the things that's happening today is that there's the convention going on for the Republican Party. And does anybody have a crystal ball of what the economic consequences will be of the presidential election, depending upon whether Biden or Trump gets in. Is one gonna hurt or help the market?
I don't know. I mean, if last 7 years are any indication, markets did very well in both administrations except for the COVID. Right? So,
Yeah.
I mean, it's increased in both. I don't know. I mean, there are so many other things that can happen. Again, how, for example, this morning there was some concern about Israel going into Lebanon and hitting Hezbollah, right?
Mhm.
So that, if something like that happens, it is much more, it's much more of a concern. I'm pretty sure if that happens, probably Iran will get into action. So to me, that may be a much more challenge than, I think markets will be stable, then continue to increase in either case.
That's the history of the market. Yep.
I was gonna say there's at least 2 to 3 international conflicts that everybody's kind of talking about. And I don't know if there's a clear resolution for any of them right now.
No. And on the other side, the 2 major conflicts that are going on, once they stop, there will be a lot of rebuilding.
Yeah.
There will be a lot of new markets and new players in both cases. And that will, again, support and enhance the world markets. Yeah, I mean, that's a good question, Dan, but who knows what's going to happen. But to me, more of a concern is if it escalates in the Middle East, or if something happens in China
Taiwan,
versus Taiwan. Yesterday, Mr. Trump said something to the effect that Taiwan has to take care of its own defense. And I know a popular company amongst better investors, the Taiwanese semiconductors, that took a hit yesterday and today. And because of that, AMD, Intel, and even NVIDIA, they took hits. So yeah, I mean, is it a buying opportunity for those companies? Probably it is, but who knows how deep and for how long it's going to be. Perfect.
Thanks, Jerome. Does anyone else in the audience have any questions, either about what we talked about today or about anything to do with stocks in general?
I have one question, and it surrounds access to value line. And they talked about it at Bank using the Fairfax library. And I spent some time trying to leverage the Fairfax library to access value line and wasn't successful. I'm just wondering what others may be doing to get access to it.
You need to pay subscription to that. I actually have a subscription to Fairfax County Library. It's like $28 per month.
Per month or per year?
I think it's a year, right?
I'm sorry, yeah, so per year. Sorry. Yeah, $28 per year.
But also, where do you live, Peter?
In outside of Boston, South Shore,
Yeah.
Boston.
So you can just use Boston Public Library, also has value line.
Okay.
Do you need for that, do you need a Boston Library card then?
Yep, you need a library card, which you can get for free. And then you just access you need to create an account for the online library.
Thank you.
Sure.
Yeah, it's
Uh,
much more reasonable than an individual subscription.
Yeah,
Yeah, free is always better.
yeah. Yeah, Morningstar and Value Line you can access through Fairfax.
And a
In
lot of
Texas.
major cities have them as well. Yeah, if you don't happen to, if you don't live in a major city, you can always use Fairfax, but most of the larger cities do also have access to those online tools. It's not always the easiest thing in the world to find them. So if you, like Peter, if you get started with that and you want some help, just shoot us an email and I can
Okay, great.
talk you through the 17 steps that it takes to get to the
Yeah,
actual value
I
line.
spent a lot of time on the Fairfax site trying to navigate it and get access to it.
No, Fairfax, unless you're a member, you will not be able to access it. Yeah.
When you signed up for that, Sherm, did you do that online, or did somebody walk you through it?
So I have to call them and give my credit card number and they will take it. For some reason, in fact, it's actually the end of this month. Mine expires. I have to renew it. So I've made a note that to call them on Friday to renew it. So I have to call them and it takes like 5 minutes to renew it. Yeah. Yeah.
Right.
Thank you.
Well, thanks everyone for joining us.
Hey,
Are there
one
any
last
other
thing
questions?
before we
Oh,
go,
sorry.
Chris, if
Go
it's
ahead,
okay.
Sharon.
The Yankee Model Investment Club, we are looking for members. If anybody is interested in joining, join us on the second Saturday of the month at 11 o'clock Eastern Time. Only thing is we have certain states like New Jersey and New York where the members we cannot accept because of the local taxes. We don't want to be, we have about 5 or 6 states where we don't want to, but other states like Massachusetts and Connecticut, and we have members from all those states. We have members from California, and I'm in Texas. So feel free to check it out. There's also our monthly meetings are on the YouTube channel. If you look for Yankee Model Investment Club, you should see. I know Brian attends our meetings. I don't know if anybody else attends our meetings on a regular basis.
I have attended your meetings.
Yeah.
I'm sorry. Yes, I have. You guys have really good meetings. But you don't mind visitors coming all the time and watching? If not, we'll just go to YouTube, but
Yeah. No, please join us. We don't mind at all on
okay.
a regular
And-
basis. We have like 30 people, typically guests attend that meeting. We are only like
Oh,
6 members, but we have 30 guests.
excuse me. I remember when you guys were about 12, about a year or so ago, seemingly. And I agree with everybody on the Fairfax Library that I had to call for help when I was registering for their site. But if you live in a town or county and your tax dollars goes toward your library system or the college's library system, sometimes they let you join their system, which is what we do in my area. So I kind of go through Nova Southeastern University. But okay, great meeting though.
Cool.
Thanks, Nathan.
Sarah, what would a person, Peter and Rita, might want to at some point consider being a member of the Yankee organization? And is there a short answer to how they would go about doing that?
To
Become a member.
to join the Yankee Model Club?
Yeah.
Yeah, basically attend a couple of meetings, and once you feel comfortable, make a presentation on an SSG. We actually have on our website. If anybody wants, please shoot me an email. And on our website, we actually have a new member packet you can access on the public folders. And I'll be happy to send that link.
I am a member of the International Model Investment Club,
Yes,
and I'm going through the papers for another club. Looking at what their requirements are. I do like the club, and so I am a member of Better Investing Clubs. How many clubs can people be a member of?
I know people who belong to 5 and 6 clubs.
Oh my, I know at least some people belong to 2, maybe 3, with a lot of experience though. Okay.
Well, one
Yeah.
of the things that I think is a difference between the international and the Yankee Club is that the international doesn't invest real money. And the Yankee Club, if you want to be a part of a club that invests money and has some smart people, I think that am I right? That you do in fact have a monthly
Okay, yes,
contribution.
yes, we have smart people. If somebody is presenting an SSG that was announced about a week before the meeting, and we individually do our own SSGs on that and discuss it during the meeting. Yeah, check out the YouTube videos from the past. I think 2 or 3 years we have done them, and play it in a twice the normal speed mode. You can skip through 2-hour meeting in 1 hour.
I think you guys do have very smart people, and I was with South Florida for about 2.5 years. So I just I kept visiting International Model Investment Club, and if you keep showing up, they'll try to get you to join.
Yeah.
So yeah.
No, but like I said, I've seen some names on our Yankee Model Investment Club. About 20 people regularly attend that meeting without being members, and they've been doing it at least for 2-3 years, I've known. Yeah.
That's a nice compliment to the group.
Yeah, I think so. But it's a couple of folks there. One guy, he said, I'm too old and I'm taking my money and going away. He's a very good contributor, but he's leaving the club, so we have openings. Very good. Anybody else? Any comments? Tim or Fawn, Gerald, you've all been very quiet, at least since I joined the call.
Yes, I'm just auditing to learn. I also follow the Yankee group and then also the international. Right now, everything above my head, I'm pretty deep down in the bottom of the swimming pool right now, but I'm hoping to follow to understand and then
Absolutely.
get comfortable someday.
That's the way to learn, Fawn, listening in to the other clubs and hearing what the questions that are asked and the presentations. That's a super way to learn. Good for you.
Thank you for opening up your forum for others like myself to come.
Is one of the things that I would just promote, because I have a vested interest. I don't live in North Carolina, but I'm a member of the North Carolina Model Club, and they meet the first Tuesday of every month, and they do it. They stream their meetings, so anybody who wants to attend a North Carolina one, you would be more than welcome. Just go to the North Carolina Better Investing website, and you can see a link to get to the model club.
Thank you, Dan, for sharing that. I'll be looking for it. Tuesday's a
Okay.
good day.
Tuesdays, we meet at 5:45 East Coast time.
Oh, that's even better.
Yeah.
Because I'm like Sharam, I kind of have a lot of things in the evening, and that's why I came late, sorry. But 5:35, you say? 5:30?
5:45. 5:45.
5:45, thank you.
Yes, so people who come from work can get to it.
Yep.
Okay, super. Well, thanks everyone for joining us. If you want to watch this again, it'll be on our YouTube channels probably tomorrow or the next day, and it's also been live streamed on Facebook. So you can go to our online chapter Facebook group and watch it to your heart's content. And we
Great.
do it. Remember, if you came later, or if you didn't remember, we are having our annual meeting, which is the first Monday of August, and that's when we'll be having Craig Bramer. He's talking about trimmer cell. We'd love to have you there. And our next, our online chapter education meetings are always the third Wednesday of every odd month. So this is 7. When we get to 9, we're going to have another one. And I hope you can make it.
Wait.
Okay.
Dan, you said North Carolina, and I look on North Carolina, and on